FOMC minutes report in the 10-minute trades trade room. My name is Lee Goldstein. I'm the trading director at 10-minute trades. All trades discussed are for educational purposes. It's possible to lose money trading futures, so please trade carefully. All right, can everybody hear okay? Oh, good. Sal, that reminds me. I should, if everyone would be nice enough to register for my webinar Saturday. There's a lot of companies presenting. It should be fairly interesting. You know, if you like that type of webinar, you know, it's a lot of companies. And for what it's worth, folks, it helps us as a company if you register. It starts at noon, and I'm at 3. And I'm really just going to be covering DMMs and stuff like that. Most of you don't need to watch me, but if you watch a few of the other people, it's really good if you register. That's the truth. It helps us reach out to more people to join our service. That's what it's all about. That's what the webinar swaps are. They call them webinar swaps, and it's a way that we can reach out to other people and let them know about our service. That's why people bug you to death about them. That's the truth. That's what they are. Besides being educational, they help companies like us grow our business. It's the model. It's the way that this business works. It's a business model that has existed forever. That's being honest about what those webinars are for. Besides being educational, they help us grow our business. That's the key. You reach new people, let them know what you do. Anyway, I don't normally do them on Saturdays. My bosses owe me big time. Big time. All right. So FOMC minutes, just for fun. I thought maybe it would be fun to go back, right? I have some old trades from 2019. Let me just go to our YouTube. We're streaming this particular trade room on YouTube. So I want to welcome our YouTube members. I want to welcome YouTube watchers. Join our channel if you would like to be notified. Hit the notification button. No, you know what, Zen, you didn't do anything wrong on that trade. The first target was 2 ticks. The second target was 6. When you have a trade that fast, nothing works properly. So you really have to chalk that bond trade up as an anomaly. It would never get a proper representation in sim because it's too fast. Okay, so you probably did not do anything wrong. I can tell you that. I would bet on it. I would bet on it. Okay, don't worry that you did something wrong. It's more the speed of the trade that creates the chaos. Okay, if you were trading it live, the odds are good that you might have gotten a couple of extra ticks of profit, if anything, because it was so fast in our direction. All right. In other words, we got filled in the direction we wanted to get filled in. Now, last month, unfortunately, the FOMC minutes stopped us out. I think think it nicked our fill, like my boss said. Yeah, look, it by one tick, it got us in the wrong way by one tick. And sometimes that will happen. There's nothing you can do about it. And this is the kind of trade you do not know what direction this trade's going to go. You just don't know. I mean, it almost looked like it was going to work for us. And then I just got out early. I didn't want to do a full stop. I didn't want to lose a full stop on it. Then it went back down. I mean, and then it chopped and went up. So no matter what, it was a stop last month. It just did not work. Did not work. The month before, it was a very good trade. Then that was too big a bracket. Too big a bracket. We used a 2. We used a 2. That bracket size will kill the trade. Okay, I misunderstood. I didn't know that you changed the bracket. Yeah, too big. Too big on the bond trades. 2 on all of them except the 30-year. 30-year is 3. Because they don't move enough. They don't move enough. You can always ask me, Zen, and I'll tell you. If you don't see it, don't be shy about asking. 30-year, no, we use ZB on all those reports because ZB moves the best, okay? We use 30-year on all the reports because of the ZB moving better. That's the truth. So FOMC meeting minutes in November was a beautiful trade. It worked great. Right. One tick bigger on the 30-year. Although I'm not sure anymore why we do that. It might be that we would be better off with 2 ticks on that. So the FOMC minutes were slow in November, hit the first target, and then they were great. Then it was great. You know, look, the issue is how much do you want to risk on this trade? Let's look at the DMM. I mean, this trade's been behaving pretty well. If you look at the past 6, you've got 3 winners, 1 loss, 2 losses, sorry, and 1 dull. So it's a little bit better than 50%, a little bit better. I'm just reading the text. The report may take up to 40 seconds to fill, so it can take time to launch. So we have a 40-second cancel. It might even take a few minutes to reach the first peak. Okay. The key is, obviously, you just want to hope that you get connected on the right side, that you get filled on the right side of the trade. So we're risking about $200 on the trade. We are risking about $200 on the trade. I want to look at the activation time. So in January, it fills pretty close to our entry time, but I I I I prefer that later activation time with news behaving the way it is now. Let's look at the trade that really worked well in November. What time was the activation? Plenty of time to go in at 1400. Excuse me. Plenty of time. Plenty of time at 1400. Let's look at October. Another winner. So here's October. Again, plenty of time to enter after 1400. That was a slow report. I think I cheated on the cancellation too. I think I cheated on the cancellation. I did. Let's see what the cancellation rule is. I went 40 seconds on that trade. Oh, no, it's 40 seconds. 40 seconds. I hung in there. So it got filled in about 39 seconds. So we were okay. We were okay. And then it went up. You can see it is slow for a decision to be made. It's almost as if they're reading the report, right? It's almost as if they're reading the report. So it's a report that tests your patience. It does test your patience. Now, sometimes moving that stop to break even can cost you a bigger profit, right? We talk about this all the time in the room, all the time. See right there, it just took your stop, and then went on its merry way. So it might be better break even minus 2 or 3, right? Break even minus 2 or 3 rather than break even. Break even is a little close for many of the news trades. It just is. It's a little close. Let's look at 8, which was a loser. August. Let's see why it was a loser, if we can tell. What happened? So it filled quick. and it did not follow through. It filled right at the tip. It filled you right at your last. There was no way to save that trade, really. You know, just when it doesn't work, it doesn't work. When it doesn't work, it doesn't work. It just, that's how it is. Seems like the slower entries work better. Let's see. 7 was a winner. Let's see if it's a slow entry or a fast entry. Fairly quick entry, 7 seconds. Touches the target and doesn't fill it. Then it fills it. Then it pulls back, which is always very worrisome. Because you've only got 5 ticks of profit. The first target is 5. And then eventually it did move up. It certainly took its time. Okay? It certainly took its time. That was back in July. Let's look, just for fun. I've got one more than a year ago. September 2019. How are we trading it? NQ in 2019. NQ, it looks like. Was it? Yeah. Not live. Not live. NQ moves on the statement. NQ moves on the statement. So NQ has a lot of movement, very choppy too. Very choppy. That was a long time ago too. The markets are not the same as they were. The markets are not the same as they were a year and a half ago. Let's watch the NQ though, because it has some good activity. Okay. Now, this is the kind of report that there's not really news, except if you hear the Squawk Box saying anything. Because it would be almost unheard of for the Fed to, I don't think the Fed's ever changed interest rates on meeting minutes. I don't think it's something they would even consider doing. I don't think, anyway. Oh, financial juice is really screwed up. They really don't understand that the bond auction's over. They still think it's going to be at 2 o'clock because they're mentioning it. That's funny. It just shows nobody is perfect, right? Nobody is perfect. So, we can show the news, but honestly, folks, it's not going to show us anything. It's really not going to show us anything. That's the truth. So the setup, one of the hardest things in the world is to trade when you have money in the bank. Don't you think? It's one of the hardest things to do, to trade when you have money in the bank from a psychological standpoint. I mean, but theoretically, folks, we have 3 more trades. And all 3 of them are very tradable. They could just as easily be winners as they could be losers. None of them have terrible ratings as trades. So you kind of got to trade them. I mean, you got to trade them. So this is a bracket of 5. Now you could trade one contract, right? You could trade one contract if you want to try and preserve more money. Those are personal choices. The entry time is 13:59:59. I prefer a later entry by a second. I prefer 1400 on this trade. Target of 5, target of 12, stop of 11. Now I need to save this because I know I don't think I put my correct account on. So I'm going to save this as FOMC minutes. Two contracts. And then now I'm going to go and look for my connection. No, I'm right. I'm okay. I connected it. So let's finish setting up the trade. So I'll finish the trade. Make sure you're highlighted. Bracket of 5. One target for 5 ticks, one target for 12 ticks. Stop of 11. Entry 13:59:59. Choose the account. Label it. Put my charts on. Let's check our time. Check our sync by going to time.is. Time.is puts us in sync. Enable the trade, right? So before you enable a trade, if you want to make sure that your time is right, as long as you have time to do it, you can do it. $13.59.59, okay, is correct. So it's a bracket of 5. Bracket of 5. Gold has been waning a little bit, and that's a fairly volatile early move, okay? It's a 40-second cancel. 40-second cancel, okay? 40-second cancel. So I'm watching gold pretty carefully. I'm not overjoyed with the move. Two minutes to go. It's a 5-tick bracket, not that big. $40-second cancel, don't forget. So this is a report, you don't see the news. It makes it a little bit challenging, right? Because you really don't know what to do when that happens. The NQ is pretty volatile also. 30 seconds. See, I don't like that. I do not like that. It's too early to fill. It's too early to fill. You have no idea if it's the right direction. That's the truth. Yeah, it really makes me upset and really ticked. There's no reason to enter that trade early. Sorry. That's just foolish. I mean, they did not know what they were going to do. Now, let's look at something. I don't like giving money back. Let's look. I want to look and see. There's no movement, right? You've got no movement on this trade. You got no movement on this trade. Still. And you got filled early, in my opinion. It was filled early. Even though there's really no news, you can kind of tell that you were filled early on that trade. Right at 2 o'clock. Okay, so very possibly, see, I would rather roll into a report trade. I would rather roll into a report trade than take the chance of getting filled early. Now, this trade, it's a whip also. It's a bad candle, right? It's not a good candle. It's absolutely not a good candle. Not a good trade. Just not a good trade no matter how you look at it. It just did not work. But you hate to throw the money away on, you've got to, on, I really believe on Fed reports, you want to enter later. And I'm fighting to try and get that across. It may not have worked anyway. I mean, that's the reality, because it might just, this trade, out of all the trades we traded today, is the weakest of all of them. But I'll tell you what I should have done. See, it filled immediately. It filled immediately. But if we wouldn't have put our orders on, it's possible if we put our orders on later, we might have gotten a better fill. We might have gotten filled to the short side. Okay? We might have gotten filled to the short side. It was very, very close. Did 14 not work, Fred? Did you do it live? Did you do it live? Okay, it did not. Well, it looked close. It looked close. I think you have to just look at the trade not working, but I would rather take the shot at 14. I'd rather take the shot at 14. On Fed reports. No, it the trade didn't work. That's 2 in a row on this trade. It's 2 in a row on this trade. Let's look at the NQ. It could be, 2 in a row is worry, starts to get you worried. It had an awesome trade in November. It was awesome. Everything felt perfect. Everything. The NQ, it would have filled you long, and it might have even hit your first target, right? So it might be that the NQ is a better, I think this is a trade that very possibly we might be able to find a better setup for. We might be able to find a better setup for this trade. Or a different index. I think gold is struggling on this index, on this trade. It's struggling on this trade. My gut feeling, honestly, was to trade one contract. And I didn't do it. And then, honestly, my second gut feeling was to get out of the trade after that bad fill. It looked like a bad fill. It looked like a bad fill. It just had that feeling, if you know what I mean. Sometimes you can sense that a trade feels bad, but you don't always, you can't trade by feeling. It just doesn't work. It just doesn't work. It's just frustrating. It's just frustrating. That maybe the warning of too much movement before the trade, too much movement. But then gold got calm. It was calm before the trade. And it did fill right at 00. So I don't think the time would have saved us. I mean, we know the time wouldn't have saved us. Fred tried it live and it didn't work. It did not work. It would have at least had to have been another second later or so. And there have been trades where doing the time at 59 makes sense. So it's just a little bit inconsistent. It's a little bit inconsistent, and that leads to frustration. Definitely leads to frustration. All right, folks, we will be back at 4 o'clock for API. 4 o'clock for API. All right. See everybody later. 4 o'clock API. All right, folks. I'll see you later.